Are you ready to start investing in the stock market but don't know where to begin? Don't worry, this video will break down everything you need to know to get started today. From understanding the basics to choosing the right stocks, we'll guide you through the process step by step. Let's dive into how you can start building wealth with smart stock market investments, even if you're a complete beginner. Understand the basics of the stock market. The stock market is essentially a marketplace where buyers and sellers trade shares of publicly listed companies. When you buy a share, you're purchasing a small ownership stake in that company, which gives you the right to a portion of its profits, usually in the form of dividends, and potential for capital appreciation if the stock's price increases. Stocks are bought and sold through stock exchanges, such as the New York Stock Exchange, NYSE, or NASDAQ. As a beginner, it's important to understand that when you invest in stocks, you're not just gambling, you're owning a piece of a company and giving it a chance to grow, which can benefit you in the long term. To make sense of the stock market, it's helpful to recognize how stock prices fluctuate. Stock prices change based on various factors, including the company's performance, market conditions, economic trends, and investor sentiment. When a company performs well, its stock price typically rises because investors believe it will continue to grow. Conversely, if a company is struggling or if market conditions worsen, its stock price may fall. These price movements create opportunities for investors to buy stocks at lower prices or sell them for a profit. The key is understanding that short-term price swings are normal, but the long-term trend of well-performing companies tends to be upward. For beginners, the stock market may seem complex at first, but it's all about understanding the fundamentals. You don't need to know everything right away. Start by learning how the market works, what drives stock prices, and the basics of buying and selling shares. As you get more familiar with how the stock market operates, you'll gain the confidence to make smarter investment decisions. Understanding the basics will allow you to become a more informed investor and help you avoid common pitfalls, such as chasing short-term gains or panicking during market drops. Start with a solid plan. Before you dive into the stock market, it's essential to have a clear and solid plan in place. The first step is to determine how much money you can afford to invest. It's crucial to understand that investing in stocks should be viewed as a long-term commitment, and you should only invest money that you won't need in the short term. Setting aside an emergency fund for unexpected expenses is essential so that your investments are not tied to immediate financial needs. By creating a budget and sticking to it, you can ensure that your investments grow without causing financial strain in your everyday life. Additionally, having a clear financial goal will help guide your investment decisions. Are you investing for retirement, building wealth, or saving for a large purchase? Defining your objectives will help you determine how much risk you're willing to take on. Riskier investments may offer higher potential returns but come with greater volatility, while more conservative investments are generally steadier but may yield lower returns. Having a well-thought-out plan allows you to make more informed decisions, stay disciplined during market fluctuations, and keep your long-term goals in sight. This plan will serve as the foundation for building your stock portfolio and navigating the ups and downs of the market. Choose the right brokerage account. To start investing in the stock market, you'll need to open a brokerage account. This is the account that allows you to buy and sell stocks. There are many online brokerage platforms available, each offering different features, fees, and levels of customer support. As a beginner, it's important to choose a platform that is easy to use and offers educational resources to help you understand the investing process. Look for a brokerage that provides a user-friendly interface, low or no commission fees, and access to tools that allow you to track and manage your investments effectively. Some platforms also offer retirement accounts like IRAs, which can be an added benefit depending on your investment goals. Additionally, make sure to review the account minimums, as some platforms may require a certain initial deposit to get started. As a beginner, you might also want to explore platforms that provide demo accounts or educational videos so you can practice trading before committing real money. A well-chosen brokerage account will set you up with the right tools and resources to start your investing journey confidently. Learn about different types of stocks. When you start investing in the stock market, it's important to understand the different types of stocks available. There are three main categories of stocks: growth stocks, dividend stocks, and value stocks. Growth stocks represent companies that are expected to grow at an above-average rate compared to other companies in the market. These companies often reinvest their earnings into expanding their business rather than paying dividends, so they may not provide immediate income. Growth stocks tend to be more volatile, but they offer the potential for higher returns over the long term. As a beginner, investing in established high-quality growth stocks can be a good strategy if you're focused on long-term capital appreciation. Dividend stocks, on the other hand, are shares in companies that pay regular dividends to their shareholders. These stocks tend to be more stable and are often found in mature companies that have consistent earnings. Dividend stocks provide a steady stream of income, which can be especially appealing if you're looking to generate passive income while holding on to your investments. Value stocks are shares of companies that are priced lower than their intrinsic value, often due to temporary issues or market mispricing. These stocks can be an opportunity for investors who are looking for bargains, as they may offer long-term growth potential once the company recovers. By understanding these types of stocks, you can better diversify your portfolio and align your investments with your financial goals and risk tolerance. Invest for the long term. One of the most important principles in stock market investing is to think long term. The stock market can be volatile, with prices fluctuating daily due to various factors like market sentiment, economic data, and company news. While these short-term fluctuations might seem unsettling, they are a normal part of investing. The key to success in the stock market is to stay patient and hold on to your investments through market ups and downs. Historically, the stock market has shown consistent growth over the long term, which means that by staying invested for several years or decades, you increase your chances of benefiting from overall market growth and compounding returns. Investing for the long term also means avoiding the temptation to make frequent trades based on short-term market movements. This approach, known as market timing, can be risky and often leads to poor decision-making, especially for beginners. Instead, focus on a diversified portfolio of high-quality stocks and let your investments grow steadily over time. The longer you leave your money invested, the more likely it is to benefit from compounding, where the returns on your investments generate more returns. By sticking to a long-term strategy, you're more likely to see your portfolio appreciate, helping you achieve your financial goals without the stress of constantly monitoring the market. Keep learning and stay informed. Stock market investing is not a one-time task, it's a continuous learning process. The more you educate yourself, the better equipped you'll be to make informed decisions and adapt to changing market conditions. There are many free and paid resources available, such as books, online courses, podcasts, and financial news websites that can help you stay up to date with the latest market trends and investment strategies. As a beginner, start by familiarizing yourself with the basics, such as understanding stock fundamentals, market analysis, and different types of investment vehicles, and gradually dive deeper into more advanced topics as you grow more comfortable. The more you know, the more confident you will feel in your investment decisions. In addition to educational resources, staying informed about global and local economic events is crucial. Market conditions are influenced by factors like interest rates, inflation, corporate earnings reports, and geopolitical events. By keeping an eye on these developments, you can better understand how they might impact your investments and adjust your portfolio accordingly. Regularly reading financial news, following reputable analysts, and joining investment communities will help you make smarter, more strategic decisions over time. As you continue your investing journey, always remember that the stock market is dynamic, and the key to long-term success is a combination of continuous learning, informed decision-making, and adaptability. Now that you have the fundamentals of stock market investing, it's time to take action and start your journey toward financial growth. Remember, investing is a marathon, not a sprint, so stay patient, keep learning, and most importantly, stay consistent. If you found this video helpful, make sure to give it a thumbs up, subscribe for more investment tips, and share it with anyone who's ready to take control of their financial future. And if you have any questions or need further clarification, drop a comment below. I'd love to help. Good luck with your investments, and I'll see you in the next video.